Morning, everyone. It's Chris from Axel as well as Solstice. You can find us on both sides. This is the weekly video for the first one for 2026. I wish everybody a happy 2026 and all the best in the coming year. You can find us on the websites, X, Instagram, as well as Discord. Remember, this weekly video is for illustration and educational use. We're not a broker-dealer. For retail, you can find us at solsticeaxelatrai.com. For institutional, it's axelatrai.com. Let's go to the first slide. And what I want to show you here before we do anything on the New York Stock Exchange as well as the Nasdaq, we can find the number of issues on the exchange and how many shares are traded. The differences between ones that are trading positive and the difference between the ones that are trading negative. You'll have an advanced decline line. They call it advanced. This is the decline. This is the issues on the New York Stock Exchange and the difference between the up ones and the low ones and the ones that were neutral. Was the total volume for the 5-day session. This was the previous day, which was, we had the holiday, the New Year. So on Thursday we were off, but Wednesday we were on. And the weekly average total volume, similar in the Nasdaq, the issued trades, number of shares in relationship to the advance and decline. Usually we look for the differences. If there's an increase in the market to the upside or downside, and if there's a change in the trend, usually it gives us an overall view. You can use that. You can find it on the Wall Street, on the YouTube. You can Google it and you can find the advanced decline line volume on daily basis. It's for free for everyone. At least I wanted to show it so that way you are aware of it. Let's go to the first slide I have up here. And what I did, I put the S&P 500 on a 3-month daily, showing you a momentum indicator, which is a MACD, which is a prioritized MACD that we use, not the same as the one that is available on most of the platforms, which are 12, 26, 9. So we use a different setup. And I showed the RSI divergence, the thermal, in relationship to a stochastic momentum indicator with a rate of change. The rate of change that is used on the universe is different than the one what we do. So what I wanted to show you is that there was a change in the stochastic momentum indicator at the same time with the RSI, and the crossing is on the MACD. On the S&P 500, we can see the 18 simple moving average. We closed right underneath it. Most people use a 20 SMA. And this is a 50 simple moving average. You can see it right here. And the reason why I wanted to show this is to give you an overall view of where we are in relationship to the momentum up or downside. So we are coming out of compression. We were uptrending and eventually in the last 4 days fell off. On Friday, we had an up day and eventually in the first 45 minutes, we fell back in. Here you can see the Nasdaq 100, which is the NQQ, which is equivalent to the QQQ, or the NDX. And I wanted to show you when we were creating lower high. This is the high, this is a lower high, then that was the low, and this is a higher high. Then eventually we created higher highs. You can see them HA, HAB, HAC, and eventually we fell back down. In the last 5 days we had a down move. So the RSI fell down, the stochastic fell down. We are in compression in that consolidation. We are underneath the 50 simple moving average and the 18 on the Nasdaq due to the sectors. The Magnificent Seven, I do include Netflix in there. Magnificent Seven is Apple, Amazon, Meta, Microsoft, Google, NVDA, as well as Tesla. And I have included Netflix in there. You can see that there is weakness in the Nasdaq. There are sector rotations between the Dow, the Russell, which is a small cap, mid cap MID, as well as the S&P 500. This is why I wanted to show you the Nasdaq when we were creating these little bit higher highs from the lows to a higher low. And this is a higher high from the low, but in relationship to we are in a symmetrical triangle. Let's see what the market will offer us on Monday. And remember, we had Venezuela and the President Maduro got basically taken by the U.S. military to New York for indictment. So let's go to the next chart. And remember to check us out at Solstice, Axel, ATRAI.com, because the Solstice ATR is under construction. We're not doing much on that website until we fix everything up. And this is one of my friends. It's a doctor. That's another friend of mine that works for corporate Foot Locker. They wanted to learn how to trade the market and understand the risk involved and what to trade, what not to trade. For people that are not sitting behind a desk, whether they swing trade or looking for positioning for entering trade, we use adaptive algorithm to trade this market with no bias. Let's go to the first slide I have up here, and I put the Magnificent Seven. You can see it's Apple, Amazon, Google, Alphabet, Meta, Microsoft, NVDA, Netflix, and Tesla. The reason why I included Netflix in it, because I consider Netflix as part of the entertainment, such as Disney and stuff. I included it in that tech sector for one reason. It's part of the Nasdaq, and it's got a heavy weight in the Nasdaq 100. So if I take a look at the high and low, we came in out of a symmetrical downtrend channel, and we kind of double topped here. If you can see, this is a shoulder, this is a head, this is a shoulder. We were creating higher highs, and on Friday, when the tech sector looked up, eventually failed. And the reason why I wanted to show this on Mag 7, including Netflix, to show you that big sell-off, and we lost the 50 SMA in the 18, we held the 83 simple moving average. This is the 116. What I'm going to do is take it off the link, and I'm going to show you Amazon, just to give you a better idea. And Tesla, what happened? You can see Amazon was going up in the morning and eventually sold off and lost the 50 SMA as well as the 18 SMA. I'm going to do the same thing to Tesla. Here's Tesla. And you can see Tesla in the last week and a half has been selling off. The 455 did not hold Tesla because it looked up, opened up here, and fell off and lost the 50 SMA, held the 83 SMA. But is there a possibility of the 429? Because you can see this consolidation here, the breakout coming down to break up, come back to this area, fall down, almost like a double bottom, rally up. This area here, the 425, 429, is very important in Tesla in order to hold. If it doesn't, then we can duplicate the distance from here to here, down to the bottom where it meets the 116 SMA and a Virgin control pivot point that's sitting down here on this candle that's never been retested, and the VPOC. So that's in Tesla. Let's go take a look at the small cap, and what I'm going to do is use the ETF in the small cap, IWM, which is the Russell 2000, not the value, not the growth, which is the F, but I wanted to show you the Russell, the difference when it came down to the 50 SMA prior day, because that was Wednesday. Then on that was the Thursday session, because it's a holiday in New Year, we were closed. You had that move down to the 50 and rally back up. This is in small cap. It is in consolidation. You can see that when it looked up here, we fell down, tried to go up, fell down, rallied, broke out of there, came back, retested it, bounced up. We are right in that consolidation area. If there's going to be continuation, you need to clear the 18 SMA in the backside of this channel in order to move up. If it falls back in, then I'll look for the pivot and the three soldiers that took us up. There was a little bit of consolidation in this area in the 116 SMA. Let's take Dow Joe Industrial Average, and what I'm going to do is use the GJ. Is it the X? Yeah, DJX, Dow Jones Industrial Average, the ETF. And the reason why I wanted to show this, I had this prior channel up here. I know we wicked below it. We tested the 83. Ever since we broke out of here, we never retested the 50 that's been holding up. We fell down to the, basically, if I drew a trend channel from this candle to this one, let's go get a trend channel. This channel no longer valid, so I'm going to remove it. What I'm going to do is get a small channel, grab this candle from here to this one. You can see it twicked it a little bit down, rallied back up, but we are on the backside of this channel. We tested the 18 SMA and we closed above it, but we are in order for it to break up, it has to clear that prior channel in order to continue up, or 50% of that move. If it falls back in, I'm looking for the 50 SMA and the consolidation in this area to find support on the Dow Jones Industrial Average. Let's take a look at the ES, and the reason why I wanted to do this, I did this on the weekly video. You saw it in the PowerPoint. What I'm showing you here is the volume profile, and I can show it on the monkey bars. This is the value area high on the monthly for December. The point of control is in royal blue, and the value area low is actually in green. The reason why when we came down, we missed the VPOC, rallied back up and closed just slightly above the 18 SMA. I am paying attention to what most people will use. A 20 SMA should be around this area right here where I have my mouse, okay? So this is the price area on the 20 SMA. The reason why I use value high, value low, and a point of control when we are trading these levels, you can go in the style. They are called market profile with volume profile. I use the monkey bars. And what I wanted to do is go to a 3 month before I do the daily. We're going to go daily. We're going to do 3 months to show you how they look like. This is the 3 month daily, and we can put the daily. As you can see, in the shadow, I have a value high, value low, and a point of control. Once in the prior month, we tested this area. This is the prior months, which is in December for the January that's developing in 2026. We have tested the value area high and fell in it, but we closed right underneath the value high of the prior months. If I zoom in here, you can see that the value high, where it is, that shadow, value low, and the point of control, which is the most volume, happened. The reason why I wanted to mark this to give you an overall view where the highs and low. And if I measure from the high, this is my prior month high, which is 69.95, and the low was basically 67.71 quarter. I can do a measuring tool from high to low and have a Fibonacci for these levels. So what we can do from the daily, in here I say show daily, I can go to an intraday. From an intraday, I can do 10 days, 20 days, 30 days, whatever. It doesn't matter. And what I usually use is a 30-minute bar. 30 minutes for the whole day to show me where these levels are in relationship where the VPOCs are and where the values high and value lows are. As you can see, this is a VPOC up the top from the prior 3 days. We never retested it. If you can see it, never been tested. So if I zoom up here and I just go like this, you can see never retested and fell back down. That's a virgin control point. I do have it marked. So if I'm going to come down to the bottom on the daily chart, I can measure the VPOC as well and show where that VPOC is in relationship in case I do come back below that 6,800, coming back to 67,1850. That's a VPOC on the charts that I do have, and you can come in just by doing this. I can zoom to the left and show you where that VPOC is, which never been retested. You can see when we're consolidating, we're testing these ones no longer valid because they've been tested to the upside as well as the downside. This is a VPOC that's never been retested, and I do have it marked on the charts. The reason why I want to mark it, to make sure when I come back to it, it's no longer valid. These will act as magnets where the profile is sitting on the charts on either side. So we trade what the charts offer us, not what we think. You can see here when we were going up and down, those VPOCs were tested, no longer valid. When it came to this VPOC here, we had one up here. When we came back on Friday, we tested it and fell through it. So on Friday, in order to get a VPOC, I want to know where my value high is. It's right here. Where my value low is right here. And my point of control, all I have to do is get that dollar sign. I zoom in this area, grab this area, zoom it in, and I highlight it in order to know where my values high and low are on the profile for that day. And I know my highs is up here. You can see it's 16 69.39.75, and my low is 68. 68, 66.50. And if I do a Fibonacci from high to low, my midpoint is right here. So we close just slightly around the 50%. If I do get a Fibonacci, just to show you how it looks like, you can see the high is 69.39.75 to the low down here. I'm just not going to make it exactly to the cents. You can see it's 68, 66.50. And you can see that my 50% is slightly below my open, above the open, as well as the close, which is 6900.75. So at least you'll know where those Fibonacci's are on the charts in relationship to the market profile. So let's go back in the charts and go back to the daily. And what I want to do is look at the weekly chart. So I'm going to go intraday, 30 days, 4 hour. So I know this was the holiday Fibonacci's. So instead of using a Fibonacci, I want to do a measured move from the high to the low from the weekly, which was actually from Monday, which is this high here. And you can see it here. That was in the prior week. This was on Friday, so we don't count that. We'll grab this high to this low here. And if I want to extend it to the right to know where my levels are on the charts, whether I'm trading equities or option, I can extend those to the left and right. And what I can do is, instead of using, I can go to 12. 3, and I can put this on so I know where, oops, I didn't do it correctly. Edit the property. I'm supposed to put 12.325. Hold on. Push it back. At least I know where my levels are in relationship, where my 50% is, where my zero line, my minus 50, minus 80 to 100%. Usually I get a rebound in those areas, and vice versa to the upside. If I do go up, I'm looking for the, 180 to the 200 to the upside. So we trade what the charts offer us. You can see on the 4-hour chart, the candle tested the 18 SMA, couldn't hold it. I used the 18 instead of the 20. This is my 50 simple moving average, 83 and 116. We tested the one with 16. We rallied. We closed just slightly above the 83 SMA. But if I end up losing the 200 SMA, so things will tend to come back down to the VPOC or Virgin Control Point down in this area. So trade the charts in front of you, not what you think. This is the best way to trade any instrument, whether it's equities, options, commodities, ETFs. Last but not least, I'm going to talk about Bitcoin. I'm going to go to MicroBT. And the reason why I wanted to show you MicroBT on a smaller time frame, I do have this marking around the 93,500. In case I do clear this area, the momentum will shift back to the upside and clear what? The 200 SMA. And at the same time, on the 4-hour chart, you can see there was a lot of consolidation back and forth in this area. And eventually we tried to break up. We are above the 18 and the 50. If anyone is long this instrument, pay attention to the 90,000 area if there's going to be continuation towards the 93 for a breakout. And if we end up losing the 89,500, pay attention coming back to the downside. But the momentum on the long time frame, if I go to a 3-month or a daily chart, we're going to go to a daily annual chart and push OK. And I wanted to show you this consolidation from before. This is where we fell down, rallied, consolidated, rallied up. We had these 3 tops a little bit higher, the 123, the 123K, 125, 127, and eventually we fell through them. And I called this area as a short coming back towards the 74,475. Unfortunately, we held the 80,000, rallied up, couldn't make it, came back down. Everybody's looking at this H pattern. This H pattern has not failed yet to the downside to come back to this box down here, which I marked. You can see it. I'd leave my markings on the chart. So this time, if there's going to be continuation, this is very important. It clears the 50 SMA and the pivot point, which is here. You can see the marking. If I put my mouse on it, is 94,799 in order to continue higher back towards the 200 SMA and the 83 SMA as well, and that's the 116. You can see the markings. They do show the levels. If I put my mouse on it and if I right click on it, it'll tell you what the instrument is. So basically you'll know what it is on the charts on Thinkorswim. and you can see the changing contract we pushed up. This area is very important in order for it to continue. You can be a little bit bullish because this is a rounded bottom, but you need to clear that consolidation in this area here in order to continue higher. I hope this video was very helpful. Once again, you can check us out at solstice.axel.com or get in contact with us. We're here to help. Take care. Over now. I wish you all the best in 2026.